Traders, this is SageFT from the live trading desk. Happy Sunday evening. Hope you're doing good. Let's go ahead and get this review and rev up rocking. All right, I'm recording this right now, Friday, just after the market closes. OMG. Perfect. Nailed it, right? So let's go ahead and review. The easiest way to see this, high and tight, the narrative all week on the daily chart was, do they have enough power to sell it low enough to be able to buy it, to have the supply for the push after the non-farm payrolls, right? So that's what we're looking at, right? So now this right here could very well trap a lot of weak players that are trying to sell to open on the daily chart. So how did we play Friday, Thursday, Wednesday, Tuesday, Monday? Let's start off with the all-time high is 58.30. After we retreated off to 58.30, we never caught back up to it. We're just looking at the daily chart still, right? Never caught back up to it. So what we're looking for is, where does it come back? Perfect. Let's go to the 4-hour chart to see this. This is a lot easier to see this way. Here's the 58.30s. Notice test failure, okay? Dip. Now here's the one thing that we have been watching all week, and I reminded everyone that this is kind of the major level, right? This tiny little inefficiency, as we're going to call it, in the market, right? This is the most efficient market in the world, right? The futures contract, right? So here is that tiny little efficiency on the 4-hour chart. So now let's just zoom out. Let me test. No close, no close, no close, no close. And notice we don't even close anywhere near it. 8 points. Okay, so we close above it, right? So what we're going to do is we're going to start drawing. Where is the draw on liquidity? On the 4-hour chart, the draw on liquidity is underneath this bar. So look, 1, 2, 3, 4, 5 draws on liquidity. This is going to be a special video because I'm going to break it down like Evander Holyfield, right? And the way that this works is we have 3 things that we're looking for before we enter a trade. Okay, here it goes. Number 1, where is the draw on liquidity? Number 2, where is the removal of the removal after draw on liquidity? Number 3, where does the 8 EMA cross the 20? Let's look at those now. Draw, 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 and they're all sweep, right? Here's the removal of the liquidity. So where did the 8 cross the 20? It took all the way until Friday, 10 a.m., 2 p.m., 2 p.m. for it to cross. Now we have the 8 above the 20 at the same time as price, moving through the 20 and turning the 20 upwards. Okay. Now that we've gotten that off of our chest, that's every single trade, every single chart. So how do we trade that? I'm glad you asked. When you hear me talk about those 3 things, you're going to start looking for your signals in your process. I'm just going to give you the context in the live stream, right? And by the way, the live trading desk SageFT on YouTube, Monday through Friday, 8 a.m. to noon. I show this all day long. And so what we have to do is we have to dive in to a smaller time frame to see if there's any entries, because this is the 4-hour chart. I do still have a call that expires 10/18. I am expecting this to go much higher, above 58.70. Okay, so now how do we enter on the 15-minute? The exact same way. Draw on liquidity, removal of the removal, and then the 8 going through the 20 at the same time as price, turning the 20 in the same direction as the 8 and price. Now, how would we look to get into the trades? Let me show you. I'm just going to use an example, right? So let's say that we have to have all 3. Good, right? So here's the first thing that you're looking for. Draw on liquidity, removal of the removal, and the 8 EMA going through the 20, turning it upwards. Now, this is kind of a flawed signal, but it's still the same thing. This is what it looks like. So how would we trade when we hear that SageFT is in the live trading desk and he says, okay, we've got all 3 of them. We've got all 3 of them. Okay. What you're going to do is you're going to wait for your pattern to repeat. I hear a bunch of people saying, oh, Rev's trading out of process. This isn't what he taught me. This is completely different than what's in the game plan. Come on. This is green overtakes red. Stop making this so complicated, please. So what you're going to do is you're going to wait for your green overtakes red to enter, whatever your pattern is. Right now, we dive down to the 2-minute, and that's where this all starts to come together. But we're just going to use the 15-minute and for the illustration for how would we enter the 4-hour pattern, right? And so you drill down. So now, how would we enter on the 15-minute? You drill down to the 2-minute. I'm not going to switch it because I don't know how messed up the drawings are in TradingView. I don't use the 2-minute in TradingView. Okay, but the principle is the same. I'm going to say this one more time, and I hope everybody watches this video. We wait for the draw on liquidity. Google draw on liquidity. It's going to be either a grab or a sweep, one or the other. We're going to find the removal of the removal. This is what the removal of the removal looks like. This is what the removal of the removal looks like. Liquidity is removed here. Liquidity is removed here. Removal of the removal of liquidity. Let me put it in Velez terms. Where's the exhaustion bar? Okay, now that I've got that off my chest, let's look at what were we expecting last week? What can we expect next week? I'm so glad you asked. Let me show you. So if we start on the daily chart, what we were looking for last week was after we got this sell and proved that the 5830s weren't going to get touched again for a hot minute. What we decided was, and you can go back and you can look at any one of my Twitter posts, you can look at any one of the Twitter reviews, videos, anything that I've talked about in the last week and a half. We have to wait for it to come down, them to find the liquidity from the players that have weak stops so they can get in at a better price without causing too much destruction in the price in which they're purchasing the shares at. It's easier for a large fund to have his order underneath the market, his bids underneath the market, and the weak players hit stops as it comes to it. Draw on liquidity, okay? So now let's go to the 4-hour chart. This is a lot easier to see. What I've done here, and I got to remove this box because it's getting a little too crowded here. Okay, so let's look at it through the eyes of the ICT bagger here, right? Hashtag ICT bagger, ICY teabagger, right? IC teabagger. What we're looking at is very, very simple, yet people make this so complex, right? If we were waiting to see if they found liquidity that they needed to push this higher, which was our anticipation, right? The non-farm payrolls, it didn't matter what the number was going to be. I hate to tell you guys all this, right? Like, oh, everybody's so worried about what the number is. How about you look at what price is, right? Let's take a step back. This is the chart of the S&P 500 E-mini future. You can Google that if you'd like to find out more information upon it. Okay, but what I'm going to point out to you is very, very simple. This is what your grocery bill looks like. Lowering interest rates a half point was the worst thing they could have done. What I mean by that is now inflation is about to skyrocket. Now we have a very high chance of continued hyperinflation. I just saw something that in the past 4 years, the average home price is up 80%. So therefore, if you guys think that inflation was only 9%, 9%, 9%, that only equals 39%, 40% if you compound it. Wrong. They're lying to you, okay? So therefore, didn't matter what the jobs report was going to be. They were going to push this bad boy anyway. Didn't matter. Right? Just a matter of did they get enough liquidity to get it at the right price? Because if they know that inflation is rampant, what this means is there is no more value creation. Even if the stock price goes up, that doesn't create the value. All that does is tell you that there's more dollars that you have to purchase each share of stock. The purchasing value of the dollar has been deteriorated so much that it's more expensive for less value. Just because the stock prices go up doesn't mean the stock's worth more money. Doesn't mean there's greater value. It just means it's more expensive to purchase because it takes more dollars. So if that's the premise, which why would it change, right? Why would there be any sort of different premise in 6 days, right? That Powell really screwed the economy by lowering these interest rates, and you're going to see that, right? So many of you are losing jobs, right? The demand destruction that he was looking for is coming to fruition, and he's trying to slow it down, even though he's the one that created it. 100%. He's the one that created the inflation, the Fed. He's the one that created the inflation over here, loose monetary policy. Okay. So let's bring it into today, right? Where are we going with this? What are we doing? What do you mean, Rev? What does this have to do with day trading? Oh, good. Good. Now you're asking the right questions. I'm so glad you asked. So the way that it works is we go down to the smallest time frame, which is the 15-minute, because there are 2 minutes to entry. We don't need to see that, right? That's not the premise of this video necessarily yet. Okay. So our thought was, how do we accumulate down here without getting wrecked? Well, we wait for the draw on liquidity. We wait for the removal, and then we look for the 8 EMA to go back above the 20. Once this thing goes back into first position, it's all over but the crying, right? So what happened? Well, here's the 15-minute chart. Back into first position strong. Let's go to the 4-hour chart, see if we're still in the same thing. Because the daily chart never flipped. Here's the 200 simple period moving average. Up. Increasing at an increasing rate, plausibly. I don't really have... Let's just say it is, right? It's close enough. 200 underneath price, increasing at an increasing rate. Price above both of them sloping upwards and pointed upwards, therefore increasing at an increasing rate. So we are in position 1. It's not initial, but it's position 1. So that's how we looked at it all week long. And so that's why the narrative was, okay, how did we get, where do we get in? Let it tell you. Let it draw on liquidity. Show you the removal of the removal. And then the fractal. 8 EMA crossing the 20 SMA with price at the same time. Perfect. Okay, so now that's what it looked like for last week. What are we looking at this week? There's really not a whole lot for me to say. Here's the downside targets, 56.93, 100 points lower. Here's the upside targets. It's very, very simple. Let's not make this more complicated than it is. Okay, so now here's how this works. Wait, do I have it at the wrong place? I have it at the wrong place. I'm sorry. So 58.68, 59.30. Let's not make it any more complicated than it is. Okay, over under, hard over under, 56.94. Now what I mean by the over under is, what do they do if it goes below? Is this the liquidity draw? Do they run it, which is to the downside, or do they draw and accumulate to push it higher? If we don't even get the retracement, does it go straight, or does it take its time and slowly meander its way up? All right, everybody, I'm exhausted. That's going to do it for me. It might be nap time for me. I hope everybody is having a wonderful Sunday. I hope your football teams on the pitch and on the field win. We will see everybody tomorrow morning, 8 a.m. Eastern Time, live on the YouTubes. The Live Trading Desk, SageFT, is the name of the channel. My name is Rev Wood. I go by SageFT, the Live Trading Desk. We will see you tomorrow morning. Good night.